Today we are taking a look at electronics manufacturing services provider VS Industry. RHB Research upgrading the stock from neutral to buy and hiking its target price from RM1.47 to RM1.65. The counter closed at RM1.43 yesterday. To recap, VS Industry reported a record high profit in its 9-month FY21, with core earnings coming in at RM204 million. That accounted for 79% of RHB's full-year forecast and 85% of consensus due to better-than-expected product margins. And going forward, the research house sees exciting earnings growth prospects for the company, despite 4Q being possibly marred by the reduced workforce capacity amid the FMCO. It points out that demand across key customers remains robust, with more production lines scheduled to be rolled out in the upcoming quarters. And earnings are set to increase when the 2 new customers secured earlier in 2020 contribute progressively once the production lines are set up and ramped up. Apart from the earnings accretion, VS Industries' customer stream will also become more diversified, gradually reducing concentration risk. RHB raised its FY21 to 23 earnings forecasts by 6% to 14% and revised its target price to RM1.65 based on unchanged 19 times PE FY22. Considering the sustainable earnings upcycle and 3-year earnings CAGR of 43% ahead, it believes VS Industries' current valuation is attractive. Risks include a widespread COVID-19 outbreak among the company's workers and delay in new production lines startup. So what's the consensus? According to Bursa Marketplace, there are 9 buys and 2 holds on the counter. Average target price RM1.62, a 13% potential upside from the stock's last close of RM1.43.